Today we're taking a look at the healthcare sector. From policy shifts to demographic trends, the sector is undergoing a transformation that's capturing investor attention. As longevity becomes a defining force in global markets, why are biopharmaceuticals and medical innovation emerging as key drivers of portfolio strategy? Well, we're going to talk about that and a whole lot more right now on UBS Trending. Hi everyone and welcome to UBS Trending. I'm Anthony Pastore. Thank you so much for being with us today. Here at UBS, the Chief Investment Office believes that there are three transformational innovation opportunities, or what we call trios, that will drive equity markets in the coming decade. They are artificial intelligence, power and resources, and longevity. Longevity as a thematic topic covers opportunities that capitalize on a longer lifespan. The combination of ever-increasing lifespans and a demographic shift toward an older population does create a range of investment opportunities across various sectors, such as healthcare, which we'll be talking about today, consumer, financial services, and real estate. So let's talk about the healthcare portion today with my guest, Eric Potiker, U.S. Healthcare Equity Strategist for the Chief Investment Office. That was a mouthful of information, Eric. Great to have you here, and thanks for sitting with me today.
Yeah, thanks, Anthony. I'm glad to be here.
Yeah. So I know that that we're talking about the healthcare portion of the longevity part, and how is that theme shaping investment opportunities as you see them right now?
Yeah. So I mean, as you mentioned in your introduction, longevity really comes down to a couple of different tracks. First, innovation in healthcare, and really innovation focused on diseases and therapeutic areas that lead to mortality where the existing therapies really don't meet the need, and also where we see, importantly, where we see payers, so governments, employers in the U.S., and consumers willing to pay. We think for the most part, payers are going to pay for therapies that make a difference in mortality rates, because mortality rates come with, obviously, death, but also a cost burden for those payers. So we think there's a combination of innovation that will address mortality and cost. And then beyond that, then there's also the demographic side that you mentioned,
right,
which is really, these are people living longer, more people in that cohort. And as people age, to put it very simply and crassly, they need new parts. And we've seen that already over the last couple of decades, and we've seen that accelerate as the baby boom generation has entered into the years where they are going to be needing new parts. So, if we go back to the therapeutic areas where we really see the innovation driving lower mortality and increased lifespan, examples are really metabolic disease, where things like diabetes, obesity, where the underlying demand is enormous, but where the treatments have been limited, and where the recent innovation, which is really an evolutionary innovation, GLP-1 drugs, so Ozempic, Wegovy, Zepbound, Mounjaro, where they've really created the opportunity to treat those metabolic diseases in an effective way, i.e. real weight loss, real lowering and management of blood sugar levels, with an acceptable, tolerable side effect profile, which was not the case 10 years ago.
Right.
There were GLP-1 drugs on the market 10 years ago. They just weren't nearly as effective or as tolerable. So we see that kind of innovation really driving the opportunity in those key metabolic diseases. Similarly, where we see other sort of lack of effective therapies, underserved markets. I'd point to oncology, which is to some extent obvious because of the sheer amount of R&D dollars and the sheer number of people who have cancer over the course of their lives.
Right.
And where the treatments, again, there's lots of room for improvement. And also neuropsychiatry, where we see a lot of, again, older treatments, underserved markets, and also a condition that leads ultimately to mortality rates that are higher.
Right. And when you rattled off a number of these GLP-1s. There are so many more on the market than when you and I first started talking about that, 3 years ago. I think it's about 3 years ago at this time when it was really starting to become part of the everyday conversation. And now, you barely know anyone who doesn't either themselves or have someone in their lives who's taking GLP-1s. And, obviously people are living longer. So there's a lot to consider here. I want to shift over for a second to some of the policy developments that we've seen within healthcare, because Pfizer and President Trump agreed to lower prescription drug prices in the U.S. They're calling it most favored nation status and things like that. Talk about the idea of what that means for the space, especially because, there's some reshoring incentives there as well. So if Pfizer, reshores, starts to create drugs here in the U.S., get that favored pricing, how does that shape investor sentiment and overall valuation in the space then?
Yeah, look, I think the policy overhang has been the key driver of poor healthcare performance, really for more than the last year, leading up to ahead of the last presidential election, and then after the election, and then particularly starting in March, where you saw President Trump really lean on healthcare policy issues, which he hadn't been doing. And our thesis when we upgrade U.S. healthcare in January was that the Trump administration would not really be focusing on healthcare policy. And that turned out to work for the first couple of months, but then lo and behold, particularly with the most favored nation drug pricing executive order that you alluded to, that started scaring investors.
Yeah.
And we've seen healthcare valuations, particularly pharma, drop to multi-decade lows. And frankly, we think that's overdone, and hence the positive reaction to the Pfizer agreement with President Trump at the end of last month. That agreement to some extent is a black box because there were very few details. But what I think it did underscore for the market is that the policy risks and the worst case scenario within those policy risks are probably off the table.
Right.
It seems from that agreement that President Trump is willing to take a win, if you will, on both the reshoring of pharmaceutical investments, which Pfizer made a $50 billion commitment, a $70 billion commitment over 5 years to avoid tariff exposure. And then on some concessions, although again, the details are very limited, in terms of bringing U.S. drug pricing down. And we think overall the impact on Pfizer will be negligible, quite honestly.
Right.
And we think if
not a worst case scenario situation.
Not even close.
Right.
And we think other similar agreements are likely to follow. We saw one last week between AstraZeneca and the Trump administration, structured very similarly, lacking details. I think the question really will be, is President Trump going to take these wins and move on and not really focus on U.S. drug pricing, or will he come back at some point and reemphasize that issue? Because it does seem like it's an issue that he really does care about. Our expectation is the attention paid to drug pricing will probably lessen from the rest of the Trump administration. I wouldn't put 100% on that, but I think that's the likely outcome, along with other pharmaceutical companies making similar vague, detail-light agreements that will probably help improve investor sentiment and bring valuations further back towards a more reasonable historical level.
Right. So, and great that we've kind of arrived at that point because obviously investors have questions about where should they be putting their money to work. And so, you've got biopharmaceuticals receiving increased portfolio weighting recently. So when you think about the different healthcare segments like pharma, medical devices, even Medicare Advantage, where do you see the most attractive near-term valuations given those particular sectors or spaces within the sector?
So I'll speak to that within our longevity EPL, our longevity portfolio, where we, in August, increased our exposure to pharma, mainly because we thought this fall would bring some clarity on that drug pricing issue as well as tariffs, which it appears to be doing. After the Pfizer-Trump agreement, we further increased our exposure to the pharma companies within the longevity trio, mainly because we like the growth profile of those companies. There are other pharmaceutical companies where I think the growth profile is more challenging. Those are not in the trio. It could be at some point in the future.
Right.
But I think overall, pharma, because of how discounted it's become over these policy fears, just sets up as an attractive return, a risk-adjusted return. We still like medical devices. Those valuations have actually come in quite a bit over the last 3 months. And the underlying growth, because of the demographic drivers for those medical device companies, remains quite strong. So we still are very bullish on medical devices. We just thought on the relative comparison of the two, where we had been more overweight medical devices within the longevity trio, we just rebalanced that by about 5% between pharma and medical devices. As for healthcare services, I think similar to medical devices, there's an underlying demographic need, more people entering into Medicare, and the services companies that cater to Medicare and Medicare Advantage, we think will continue to see demand. However, we've seen this year pressure in the Medicare Advantage space because, frankly, most of the Medicare Advantage companies, including United Health Group, have mispriced Medicare. So we're in a bit of a pricing cycle that has certainly pressured United Healthcare and others this year, we think we're probably at the bottom of that pricing cycle, so those dynamics should improve, and we've actually seen United Healthcare bounce a fair amount in the last 2 months.
It's amazing how many dynamics, you just use the word dynamics. There are so many dynamics in the space and so much to think about. Really quickly, Eric, as we're wrapping up, always we want to make sure that we give everyone the full picture. You touched on a few of these kind of risks or things to be considered for investors. Any others that you want to highlight before we wrap up?
Yeah, sure. I mean, the longevity trio is going to be, for the foreseeable future, it'd be dictated by how the healthcare sector performs.
Right.
The healthcare sector competes with other sectors for capital when you have a strong cyclical driven economy, especially with all the capital expenditures being directed towards AI, and we see that in the other two trios. That has created a tough environment for healthcare to compete for capital. So that's one thing to think about, the relative positioning and the economic cycle. The other piece, more longer term, as an underlying risk for healthcare and for longevity, are payers. And if you think about who payers are, globally, they are mostly governments. They're mostly federal governments that deal with budget constraints. Certainly, we see that in the United States. So the underlying risk, I think, is if the fiscal pressure in the U.S. and in other countries basically causes payers to pay less for these key healthcare innovations. And that is a perennial risk in healthcare. I think ultimately, as I said, payers want to see their populations live longer and live better.
Right.
So it's not just lifespan, it's also what's known as health span. And we feel like the longevity trio is playing into both of those themes, knowing that at some point, there is always a limit to how much the payers will pay.
Yeah.
We think we're positioned where companies are offering the innovation and the services and products that really help, again, improve both lifespan and health span.
Right, and according to a recent report that you put out, your longevity market's expected to grow an estimated $8 trillion by 2030, so a lot to put into that particular segment.
Absolutely.
Lots to talk about, and I wish we had more time because there's a lot to talk about here too, but thanks for coming by, Eric. Good stuff.
Sure. Anthony,
Good
great
to see you. Eric Potiker from the Chief Investment Office. And for more information on everything that Eric is putting out when it comes to healthcare, longevity, or the trios, make sure to check out our website, ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. Plus, we have a dedicated Instagram channel at UBS Trending. Lots of great content there for you. And as always, if you have any questions about what Eric and I spoke about today, please continue this conversation with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, everybody. And remember to keep your eyes on what's trending. We'll see you soon.